Hi, everybody. Dave Rauch here, CEO of ProTec Building Services, and I am joined today by Jon Epsten. And Jon is an attorney with the law firm of Epsten
Epsten APC.
APC.
Yeah.
And Jon, will you tell us a little bit about yourself and what type of law you do? And I know you have an office location in
Mission Valley.
Mission Valley and Palm Springs too,
Correct.
right?
In
So can you
Riverwalk.
tell us a little bit about
Sure.
you and the law firm?
Yeah. So I just started my 40th year practicing homeowner association law.
40th.
Yeah. Yeah. Boy, that's why I'm so great. And before that, I managed homeowner associations.
Mm-hmm.
I worked for a company here in town, Property Management Associates, and I managed and also practiced law.
Mm-hmm.
And it boiled down to going to meetings and seeing the attorneys leaving like after the first hour. And I was as a manager, I was there for 5 or 6 hours afterwards. So I decided just to go back and
Ah,
practice law full time. And it's been very rewarding. I was involved in the initial Davis Sterling Act with, had some input for
uh-huh.
on that back in the early 80s. We actually developed our own reserve programming, very similar to what it is today,
Hmm.
where we took components, took useful lives, did our own work back then. There were no reserve specialists, so we were always ahead of the game with it when it came to maintenance and reserve items. A
Yep.
lot of fun.
And I know you did a lot of construction defect law, and so therefore you know a lot about buildings.
I did. When I was in management, we did the first construction defect remediation projects in San Diego,
Oh, really?
near Mesa.
Huh.
And then as I start practicing and doing construction defect law, I did a lot of stick built work and then the downtown high rises. So I learned the stick built and then the downtown high rise, which is a whole new thing
Whole
for
new
me.
thing.
Yeah,
Yep. And I was involved with that too,
you were.
with BOSA.
Yeah,
But and I met Jon when I worked at Jaski.
right.
You did work for a number of the managers there,
I did.
and you were
And
friends with Nora too.
Nora Jaski, yeah.
Those were the good old
Yeah,
days.
they were.
And I do know too that you have a fantastic seminar, conference, symposium, I think you call it.
Right. We do an annual symposium for our clients and
Hmm.
clients being board members, but we also invite managers. We usually have about 100 managers and anywhere from 400 to 500 board of director members. COVID, we're not sure how it's going to affect attendance this year, but we're hoping to have 300 or 400 people.
Hmm.
And we've got a phenomenal group of lawyers who present at the symposium.
Hmm.
I'm very honored to be working with some very good lawyers. And so we've got one in November that's in the desert, in
Hmm.
Palm Desert. And then we have, I think it's December 8th in San Diego at the
Hmm.
Town Country Convention Center.
Hmm.
And our firm focuses a lot on preventive law.
Hmm.
It gives us an opportunity to educate the board members so they can issue spot to hopefully stay out of litigation. That's our goal. We also talk about hot topics, new legislation, case law. It's well attended. It's a good program. We've been doing it for a number of years.
Yeah, I mean, I've been to quite a few of
You
them,
have been.
and they're always very well
Right.
attended. I think there are about 1,000 people there.
We've had
And
our biggest attendance has been 880 people.
oh, okay,
And
this
that was
feels like
pre-COVID.
more.
It feels like more, yeah. And that excludes our
Yeah.
vendors that participate.
And is this the first one this year since COVID hit us?
No, we did one last year,
You did one last
and our attendance was down. I think we're about 500 people last
Gotcha.
year, 440 to
Gotcha.
500 if you include the vendors.
Hmm.
Yeah,
Yeah, but a lot of board members.
lots of
I
board
do know
members.
that.
Yeah, lots of board
And I also know that Jon was on the committee that wrote the best practice for maintenance, which
members.
came out this spring from CAI National. And I know that was a lot of fun
Yeah. Yep.
doing all that work.
Thanks for getting me involved. That's a
Yeah,
great.
yeah.
It's a great publication.
Hmm.
I'm hoping the managers pick it up and read it. I'm
Hmm.
glad CAI is not charging for it,
Hmm.
so hopefully more people will pick it up and read it. I think it's going to be the leading edge of maintenance for its community associations. It's an incredible, easy to read booklet,
Hmm.
and really is it tackles some of these issues we're going to be seeing in deferred maintenance, and that we're going to see with these balcony repair issues.
Hmm.
And I'm very proud of it.
You did 10 or 20 pages on the law
Right.
and on contracting,
Yeah.
which we saved the best for last. Yours was
I don't
at
know
the
about
last,
that.
but no, that was a great job.
Yeah.
And interestingly, it does now dovetail into the new reserve study updates. So what are your thoughts? I mean, I know it probably hasn't taken hold with all the reserve preparers out there yet, but at some point they are going to have to adopt all those new updates.
One of the things that I've always told boards of directors, and it dovetails into answering your question, I can never answer a straight question,
That's okay.
that boards have never really taken reserve studies seriously.
Mhm.
I shouldn't say all, that's not fair, but a lot of them, it's a legal requirement, so they do it, and then they do the
Mhm.
updates. and it kind of gets shoved in the drawer. What these updates really focus in on is the fact that there needs to be more board participation.
Hmm.
The boards are going to be pulled
Exactly.
into these reserves, and I would encourage every board member and management to get the reserve preparer into the meetings and have the reserve preparer explain what the reserve study is. Now, it's going to change. You know that, you mentioned
Hmm.
that, and I believe you participated some on those changes. But the law right now is that the reserve preparer has to do a visual inspection. Yeah, they go and they look at things, few things,
Yeah.
something's falling apart. They don't really need to say anything. They're not required to. Some do, some don't. But with these new standards, which are excellent, the first of all, it kicks out the useful life. Is right now in California, the law kind of suggests that you don't have to reserve for things that are over 30 years
Hmm.
old. Well, that's really hurt some associations, like associations that have tile roofing,
Hmm.
where the underlayment is burned out and they have to replace
Yeah.
that at extraordinary cost.
Yep.
But the reserve preparer said the tiles were old, were good for over 30 years, so we didn't take in consideration the underlayment. Well, that's all going to change
Great
because
example.
under the new reserve standards, they're going to have to reserve for those
Mhm.
things. So they're not going to be limited to that 30-year or have that 30 years or limit. Another really good part of it that I really like is when they find something that they don't like or it causes them concern, they're now going to go out and hire an expert
Mhm.
to analyze, like asphalt, a road, for example, or a roof, and they're
Mhm.
not really too sure what's going on. They're going to bring in consultants, and they're going to be looking also at the association's records to see what maintenance has been done on certain components.
Exactly.
Yeah, and that's going to be an important issue. So they're also going to build in preventive maintenance
Mhm.
section where right now it's questionable whether or not reserves can be used for preventive maintenance reports. That will be all bundled up into the new reserve study.
So a lot of changes. It's
A
going to
lot of
be,
changes and a lot of overdue changes.
yeah. And the fact that they're going to tie it into maintenance by asking what type of maintenance they do, if they have a maintenance program on hand, I think is one of the key
Yeah,
things. Because the idea that I think is that the reserve study preparer needs to explain to the board of directors that, hey, this is a great savings account you got going on here. But the idea, the objective is to get the longest possible life out of these components. And
right,
you're not going to do that by just putting money in the bank.
right,
You have to do that by doing the maintenance, doing corrective maintenance timely, fixing things when they break quickly, and then also identifying the preventive maintenance items that need to be done and doing the maintenance.
right. Yeah,
So it's going to be interesting. My question to you, John, is you're very familiar with high rises.
I am.
And I know you do a lot of work on a lot of the high rises in downtown San Diego. So is there any special concerns you have about the reserves, or is it going to benefit the high rises even more than the horizontal condos?
Well, I think there's going to be more more components considered.
Gotcha.
The problem, as you know, the problem we have high-rise typically is plumbing.
Mm-hmm.
And so we can't open up every wall to look at the plumbing, but the new reserve standard suggests that those issues it should probably be looked at or considered, even
Mm-hmm.
though they have a useful life of 25 to 30 years. So I believe, and we haven't seen this yet, or I haven't seen this yet, is that the reserve preparers will start saying, okay, well, pipe doesn't last forever. And that's a big number. It's a big number.
Mm-hmm.
And then you put in the component as to whether or not it's foreign pipe, non-domestic pipe, and its useful life is less. So those considerations have not been made in most of the reserve studies that I've seen for high rises. They
Mm-hmm.
now, if you have non-domestic pipe and the project's 20 years old, there should be a reserve component for that, maybe going out another 15 to 20 years. So we're going to see those changes in the high rise reserve.
Yeah, but those are big reserves,
Big numbers,
big
big
numbers.
number.
We're
Yeah.
talking millions and millions
Yeah.
that
It could be,
need to be reserved.
yeah.
And I'm curious as to see how the new standards change the actual numbers.
Right. And you've got other things that are oftentimes overlooked in high rise, like the building caulking is an
Hmm.
example.
Yeah,
Uh,
facades.
the facades,
Yeah.
there's going to be a lot more investigation into the roofing,
Hmm.
the waterproofing, and that type of thing. I believe, with these new standards in place.
Sure. Now, the reserves for a high rise are different also with respect, you've got all that mechanical equipment. Each one requires a lot different types of maintenance by contractors that work just on that
Right,
equipment. And so, the reserve study preparer is going to have to probably contact each one of those contractors
right.
to get updates on that equipment. So that makes it a real, and I hope boards appreciate it, a real good document, a real good reserve study. And it becomes what I think we were hoping reserve studies would be originally, which is not just a savings account, but a document that could provide information
Right, and that's a good point that I didn't mention, that the changes in the standard, or the addition to the standard, is for the
Mhm,
maintenance, the reserve preparer to contact the maintenance, the vendor.
mhm. Right.
And they can save the association tremendous amount of money if they're
Mhm.
maintaining the HVAC, the cooling tower, and regularly, that useful life may go up.
Right.
And so, and I believe that was the intent of the
Mhm,
people who make
mhm.
those changes.
And another interesting point is that, attorneys always like uh,
Careful.
documents be saved,
Yeah,
right? And so, all this additional documentation will be saved. And I think that's good for resolution of conflicts in the future. I mean,
it is.
wouldn't it be?
If the board does what they need to do, and
Hmm.
I realize they're volunteer directors, and I appreciate that.
Hmm.
But they need to stay on top of that reserve study, and they need to have a plan to fix things. I think that was
Hmm.
a concern that I've seen in some of the publications. Is great to have a reserve study, but it doesn't mean you're going to fix anything. So,
Hmm.
useful life's zero, but the board waits to fix it, and then the pool's shut down for the summer.
Yeah, yeah.
So that's
And hopefully, this new updates, the new standards do result in more communication between not just the reserve preparer and the board, but the contractors doing the work,
yeah.
and the board gets good information, better information on what needs to be done.
Right. Another thing we should mention too on the reserve studies is also going to pull the information up from the balcony inspections, where this,
Hmm.
not all associations will be subject to the balcony inspection,
Hmm.
but all that information about what's wrong with the balconies will be put into the reserve. So
Hmm.
now the boards can start reserving for balcony repair and
Right.
replacement. Much to my surprise, I learned, as talking to some structural engineers, they're finding some significant problems in these balconies throughout San Diego, and I was
Mhm.
shocked to hear that. I was speaking to an engineer just the other day, and he told me that the balcony, the dry rot runs from the edge of the balcony all the way into the living room of the unit. And
Mhm.
he said that that balcony alone was going to be like $30,000 to repair.
Yeah.
So the boards really need to get a handle on that. And the unintended
Yeah. Yeah.
consequences are, they're going to have, or intended consequences, they're going to have to put it in the reserve. The unintended consequences, we don't know how big the issue is. It might
Yeah.
be bigger than what we thought it was.
Yeah. The good news is that we'll enhance safety,
Hmm.
which was the intent of
Add value to the property
add
value.
enhance safety, add value for sure.
Yeah,
But what I think a lot of board members and managers and other industry professionals don't realize is that how expensive it is to replace a deck that's attached to a building, especially when it's cantilevered.
right.
You're talking a lot of wood,
Yeah.
a lot of repair, a lot of demo, a lot of unseen condition. Speaking of significant expenses, I'm sure you've been talking a lot to your clients about the new insurance costs,
Yeah.
especially here in California because of the wildfires, but also because it's a hard market now.
Right. I think we're going to see a real problem with insurance. We saw this in the 80s, actually,
I
where insurance
remember.
companies pulled out, or they raised their premiums. In fact, the law that allowed associations to raise assessments without a member vote to
Hmm.
20%, a lot of there were, before that law, a lot of the CCR said the board can only raise the association assessments 2 to 3%. The reason they put that 20% in, one of the reasons, was because of these insurance
Mm.
premium increases. So the board didn't have to go back and get a membership vote. I believe that the insurance problem is going to be somewhat catastrophic for a while.
Hmm.
It's going to affect not only the sale of the units, the ability to finance them,
Hmm.
and
Yeah.
it's concerning. It
Yeah.
really is. And the new Fannie Mae guidelines are requiring full replacement cost. I'm not sure that insurance is going to be available at a level where owners are going to be able to afford it. It's going to be a cycle. Hopefully, it'll be over
Hmm.
a few years. But they've hit some really bad losses. They've had some really bad losses due to the wildfires, as you
Sure.
know. And listening to an insurance report this morning, it doesn't look good. It
Yeah.
looks like the
Yeah.
situation is going to get a lot worse before it gets
Well,
better.
a number of insurance companies that insure homes have pulled out of the state. They're no
Right.
longer writing, and I'm assuming that's because the state won't allow them to raise rates enough to cover their costs.
I'm not 100% sure on that. I know that
Hmm.
car insurance, they regulate pretty heavily, but
Hmm.
I think the problem is reinsurance, that the
Hmm.
company who reinsures the loss, they just don't want to be involved in these losses. They're just too
Interesting.
great.
The insurance carriers want to kind of follow Fannie and Freddie's lead and become more restrictive in their lending,
Yeah.
where communities, HOAs, are not doing maintenance.
Exactly.
And what do you know about that? What have you heard
Well, we've
about
seen
in the industry?
a trend, a slow trend, where lenders are now asking for, similar to what Fannie Mae requirements are. They're asking for reserve studies.
Hmm.
They're asking for financials. I don't know if they look at them, but they're asking for those. So worry about associations that have 20% reserves because that could affect the
Hmm.
lending. Lenders are this whole lending issue is going to tighten up. Insurance is going to tighten up. It's going to be harder to get. Now we've got Fannie Mae with all their requirements,
Hmm.
which it could be also devastating.
Yeah.
Their managers are going to be have a tough time responding to the Fannie Mae requirements.
Hmm.
Lawyers are going to be asked to give opinions on whether or not how serious a lawsuit is and whether or not there's could be a
Hmm.
financial loss to the association. So the attorneys are going to be busy, the managers are going to be busy, and the boards are going to be scratching their head thinking, what just happened?
Jeez.
Fannie Mae, as you may know, underwrites about 70% of the
Hmm.
loans. You take the insurance, deferred maintenance, and Fannie Mae requirements. There's going to be
Yeah.
some challenges for associations next
Yeah.
few years.
Well, I mean, from my perspective, I think it's smart for HOAs to do as much maintenance as needed.
Yes.
And then they'll avoid some of the negative consequences from like Fannie's new regulations.
Right.
But what else can an association do to bring their premiums down other than maintenance?
Well, they can increase their deductibles. Some
Right.
PCNRs may have to be amended to increase the deductibles. Fannie Mae is going to require deductibles to be budgeted,
Hmm.
which I've always felt was a good idea, especially downtown
Budgeted mean paid for over time?
in the budget.
Okay.
So as I understand what Fannie Mae is going to require is that some associations, downtown associations, have 10 to $25,000 water loss per unit deductibles. And what Fannie Mae, as I understand, would like to see is that those deductibles be budgeted, maybe a deductible or two.
Hmm.
I'm not sure exactly where they came down on that, but they can raise their deductible and then budget for paying a couple of deductibles a year. That might lower their insurance costs. Risk management is another way to do it. And the big debate is, do
Mhm.
you submit every insurance claim?
Yeah.
And there's mixed feelings of this. We have clients out say, well, we don't really want to submit this because we want to lose our insurance. The problem, if you don't submit it, it turns into a larger claim down the road. You may have risk your ability to have full coverage on that claim. So as lawyers, we're always very conservative. Report it. If the board makes a decision not to do it, as long as they know the risks of it, fine.
Yeah. Yeah, because I've always said that the insurance companies never lose.
Yeah.
So if you
Well, they're
submit,
losing now to make
your
you feel any
premiums
better.
are going up. But
Yeah.
but yeah, that is for an HOA, I guess there's different considerations.
Yeah. And there's the FAIR plan. And the FAIR plan, which is state funded, there's concern that the FAIR plan will not be able to handle the amount of business or cover the losses that would be
Mhm.
a catastrophic failure. So the FAIR plan is a good stopgap for associations right now, but and homeowners, but not necessarily. It's not necessarily going to solve the problem on a long-term basis.
And are you seeing any differences between the insurance challenges of high rises downtown versus condos versus your communities that are out in the desert?
The risks are different. High-rise condominiums, as you're well aware,
Yeah.
suffer from water leaks, from backups. And
Yeah.
so, yes, we're seeing changes. We're seeing high
Yeah.
deductibles on
Yeah.
that. And then, of course, associations are in fire zones.
Right.
As you may or may not know, the insurance industry has developed a fire map, and if you're in that area, they'll either not
Yeah.
write you or give you a very large premium to consider.
Let's talk a little bit about Freddie and Fannie.
I haven't really a chance to dive into them too
Mhm.
heavily, but so this is additional regulations on their questionnaire. And so they're going to be asking for such things as the structural engineering reports. They're
Mhm.
going to be asking about litigation. They've already signaled what certain litigation will be cause the association to be ineligible.
Oh, really?
For example, if
Interesting.
there's a lawsuit against the association on a habitability issue, or a structural issue. Some homeowners' wall starts to cave in, the association doesn't fix it, and they sue the association. They're also going to look carefully, I think, at these reserve studies. I don't know if they're going to look at all the other things they're requesting, like the insurance policy. I don't think they're
Mhm.
going to look at insurance policy, but they may look at to see whether or not the replacement coverage is in there. It's a lot of stress on not only the lawyers and trying to help the managers and the boards do this, it puts a tremendous amount of stress on the managers on how to deal with it, and then the boards who are getting the brunt of it because people can't close because they can't get a Fannie Mae back loan.
And you know how frustrating that is.
Yeah, I do.
Trying to close a home purchase or sale,
I do.
that is a very stressful time.
Yes,
And you can imagine the managers are getting a lot of phone calls.
they are.
And I guess I don't know if anybody else is this way, but I keep thinking because Fannie and Freddie are located in Washington, D.C., that this is more affecting the East Coast, but it's not necessarily true.
No.
I know that a couple clients of ours in Orange County have been affected by this. And as a matter of fact, that one client was in that Orange County Register newspaper article that originally came out about the blacklist,
Uh-huh.
the 1,700 HOAs that were blacklisted by Fannie. And I haven't really heard much about the blacklist since then.
Yeah.
Have you?
Well, I heard something the other day. I heard that associations that are not doing their balcony inspections or may get on that blacklist.
Oh,
I don't know if that's true or
yeah,
not. It makes some sense though,
yeah.
that because it is the law that you have it.
Right. But you bring up a great point, which is how will California's deck law, how will that affect at all the Fannie's application?
Well,
And
that deck, I
you
suspect,
have to be on there,
yeah,
right? Yeah,
they're going to request that because that
yeah,
potentially could, that's a structural report. So that structural report most likely will be required by Fannie
hmm,
Mae to be produced.
right.
And then what's the next question? What are you doing about it? Right? Fannie Mae's going to say, May they won't
Yeah,
even ask that question. Well, you want to say, We're working on it. Our reserve analyst
uh-huh,
has it,
uh-huh.
and they're coming up with a reserve program. And of course, if there's no immediate need for repairs, that should satisfy Fannie Mae.
And the other thing is everybody was wondering, well, where's the enforceability of the new deck law here in
Mhm.
California? And it could be that this is it.
That could be it. It could force,
This could
it
be
could
it.
again, unintended consequences, right? It
Yeah,
could have, or maybe it was intended. It is going to force associations that want Fannie Mae loans or individuals that want Fannie Mae loans in associations to
yeah.
do their debt.
I guess we'll stay tuned and we'll continue to monitor what Dawn learns with Fannie Mae and Freddie Mac on this whole
Yeah.
thing. And
She's
yeah, she,
champion of our
yeah.
association rights.
And let's take just a few final minutes to talk about management company roll-ups and manager changes, because I don't know about you, but I've seen
There
a lot
have been
of
a lot of
changes.
changes. Yeah,
So
I can tell
what
you,
have you seen?
we're seeing a lot of changes. We're seeing managers leaving the industry. It's a tough, having been there and having watched it,
Hmm,
and you're involved peripherally on it
hmm,
in the industry, well, on the dealing with managers. It's a tough business, and it's not one that has a lot of glamour at times to it. You get homeowners that are very hostile. You get boards that don't want to sit down and talk. They want to embarrass the managers in front of in meetings. And those managers have had enough, and a lot of
yeah,
them are, I
yeah,
shouldn't say a lot, but they're leaving the business. I will tell you that very successful managers in this town have very good relationships with their boards. The boards meet with them, they do performance reviews. When something's wrong, they work together to correct the problem.
hmm,
If boards did more of that, I think we would see less turnover. And if the board supported the manager when the manager's right, then I think that would be helpful.
hmm,
We really need to bring the management companies and the boards, the managers and the boards closer
hmm.
together and work in unison.
It's this, because I know we have a lot of young managers that are getting into the industry that we work with,
Mhm,
and that watch the maintenance manager newsletter
mhm.
here. What advice would you have, an experienced, not only manager, but an attorney that's been in this industry for 40 years? Do you have any advice for those young folks getting into this industry?
Education,
Mm-hmm.
number one.
Mm-hmm.
Uh, there's a lot of good information on YouTube to educate yourself. Stay ahead of the
Mm-hmm.
curve on the education. The key to a good manager, in my opinion, is really issue spotting, knowing where there's a problem and bring it to the board's attention. Follow up. When an association I represent that's got over 1,000 members, they actually do an action list. At the end of the meeting, the board goes through an action list. And then the next meeting, they follow up on the action. So many things drop off the agenda because there's
Hmm.
so much going on. Having a good agenda with an action list is a good thing for
Mm-hmm.
younger managers to have, because if you're a portfolio manager, you may be managing 5 or 6 properties. You don't in today, when I was doing and managing 5 or 6 properties, we had like 4 lots,
Yes.
right?
Yeah.
We didn't have to worry about much.
Yeah.
Today, there's so much to do,
Yep.
and learn from your peers.
Mm-hmm.
There's some very good managers out there.
So learn and grow and stay organized.
Stay organized, yeah, and stay
Right.
out of court.
Awesome. Well, thank you
Yeah.
so
All
much,
right. You're
John.
welcome. Thanks
Appreciate
for
your
having me.
time and
I
your
appreciate it.
advice today.
Thank you.
And thank you, everybody. Stay safe.